Hey everyone, welcome to Shunya One, episode 194. We are almost getting close to the 200 mark very, very soon. And this episode, like all the others so far, is yet another very, very interesting conversation. I'm in conversation with Subramanya S V, who's the CEO and co founder of Fisdom. Now, Fisdom is actually one of those apps and platforms which have been around for quite a while. They've been very unique in seeing the transformation journey of the fintech world and specifically the investment world, right? The wealth tech world, or whichever buzzword you choose to identify with. Uh, they've seen this from very early on, and they've seen this to where it is today. I had a really interesting conversation, which I'm sure you'll enjoy. Subbu, as his friends call him, is a great I would say, speaker on all things fintech over the years, given his unique position. And we got into a lot of that. So let's take a quick break and come back and jump into the conversation.
I have a very funny story. Can I say it? Hi, I'm Shweta. I'm Navya's mother.
Hi, I'm Shweta. I'm Navya's mother.
I am Navya's Nani. My name is Jaya Bachchan.
I got nothing over here, guys.
It's a big day for me.
Okay, start. What the hell?
I was saying something very nice and empowering, and you just interrupted me.
Don't complain, don't explain, never explain.
Let me say it.
I have my little secrets. Hello, madam. How are you? I got your number. I told you don't get me started.
Mom.
When you want to do money pinching, you're also very good. I've seen you. I've noticed.
I finished these many books. You're still on your first book. I finished so many books. I'm like, what the hell?
Leave me alone.
Definition of love has changed today. I'm too old for all this. Navya, there's a wonderful lake. Go and jump into
And
it.
drown
and
in
drown.
it. And she does.
Oh my god, stop.
What are you saying?
What the hell? It's important to have friends.
My best friends have been Navya and Shweta.
Aww. I have a problem saying no.
You better learn. It's the
the
best,
best word.
Oh my
Oh,
god.
Okay.
What the hell, Navya?
What the hell, Navya? You're saying this podcast is called What the Hell, Navya? I have at least 3 What the Hell, Navya episodes in a day.
Hi, Subbu. Welcome to Shunya One. Finally, it's great to have you here after you being a listener of the show already, right?
No, absolutely. Thanks, Shiladitya, for having me on the podcast. I'm a very avid listener of podcasts. In general, I spend a few hours a week listening to podcasts during commute, office commute, outstation travel commute, and one of the podcasts. And I listen to several IBM podcasts, and specifically yours. I've listened to a bunch of episodes. So thanks for having me, and I look forward to the conversation.
No, thank you so much. Thank you for being here, giving us the time. Thank you for being a listener, of course. And, it just makes this conversation that we're going to have a lot more easier, I guess, because if you know what the show is about, I think, it just sort of makes the conversation easier in terms of what we talk about, what our listeners expect, being one yourself. And, it's great to have you here after, let's say, also me personally, on a personal note, knowing about Fisdom, what you guys have built over the years, the fact that we've worked together in some sense in my previous avatar at Zavatap. I think it'll be great to sort of hear in your words a little bit of the origin story as to why you chose to build, let's say, a wealth tech product. What was the inspiration? What was the state of the art at the time when you looked at the landscape? Can you set context for everyone listening in who doesn't know what, let's say, Fisdom is today, about the journey you've had so far?
Absolutely. That's a great starting point, Shiladitya. Although what wisdom is today is obviously like significantly different from what we started out
Of
with,
course.
but it's great to talk about the early days. So, my background, Shiladitya, is I used to be a venture capital investor. So I'm one of those breeds who spend in fact, most of my time has been spent in investing. So 9 years out of my career was in investing, initially as public markets and private markets, and then venture capital. And 2015 is when I decided to turn an entrepreneur. And the reason for that, the inspiration for that at that point of time was one, working with some amazing founders. I had the fortune of working with some amazing founders who are building e-commerce companies, transportation companies, food delivery companies, classifieds. It was just inspirational to work with some of those guys, and they truly inspired me to sort of think about this.
Right.
Otherwise, I come from a fairly conservative family where no one, in distant relatives is a businessman, right? And I think by 2015, it was also very, very clear that in general, capital availability is going to be here. Risk appetite for various things is higher. There are various types of capital available, market opportunities available, and I had personally had seen the kind of disruption that was happening in various industries thanks to internet, and we felt that there was
Mm.
newer industries going to be created. And the one that I understood and the one that had the closest to my heart was financial services. And usually financial services tend to be laggards in adopting technology or internet, right? And healthcare. Those
Mhm,
are the two which
mhm.
always come to the end. So I said, look,
Right.
that's what I understand financial services company. So there's a bit of a top down, there's a bit of bottom up thinking. As a VC, I've been trained in top down thinking as well.
Of course.
So that
Yeah.
was a top down piece, right? So in 2015, the feeling was, look, if this is not the time to build something that endures over a long period, there's no better time, right? I was also much younger as well,
Right.
right? So in 2015 I quit, and 2016 we started Fisdom. And at that point of time, the macro vision or the big deal was, hey, listen, look, let's build a digital financial services company, which will be a digital equivalent of a Bajaj FinServ or an HDFC Bank. But obviously, you have to make a
Mm.
start somewhere. Where it's a long journey. The other realization I had from a VC world was it takes time to build these companies. It takes 15 years to build these financial services companies, right? It takes time. It
Right.
takes a lot
Right.
of. You need to be trustworthy, and that takes time. So where do we start? Like I think that's where we decided to start with investments, as a path to start. And if you look at from a consumer's perspective, right? What do consumers
Mhm,
expect from a financial service? There are basically four or five things. There
mhm.
is payments, investments, insurance, and credit. These are the four broad pools of services, and then you add a banking to it where I keep your deposit, right?
Sure.
So we said, look, let's start with investment because that was the most we felt, at least that's where the market opportunity or the user pain point is. And when we try to understand users, like it was pretty obvious that massive market, but customers
Mhm.
fundamentally suffer from three problems, three challenges: lack of knowledge, lack of access, lack of trust. People have
Mm.
surplus money, whether it is 100 rupees or a million rupees or a crore is kind of less relevant. Across the spectrum of 100 rupees to a crore, the problem from the user's perspective is like the same.
Right.
Lack of knowledge, lack of access, lack of trust. As it says, look, I don't know how to become an investor, I don't know where to invest, I don't know whom to go through. And mind
Mhm.
you, this is 2015, 2016, before demonetization and before mutual funds here, before COVID induced boost in
Correct.
capital market, before fallen interest rates, blah blah blah, right? So this is way
Correct. All
before.
the various transformations we've seen as
Correct,
as
right? So
as as public versions of this as well, right? These are very public things you mentioned where it put financial services in the forefront. So yeah,
correct.
I think your biggest job was just the fact that this is possible
Yeah,
itself
and also
communicating that.
awareness. There was no awareness about these products, right? Today, there's so much of awareness that is being done by the regulators themselves, right? So,
Correct.
if you want to become an investor, I'm not even kidding, 2016 feels like dinosaur era. In 2016,
Yeah.
if you have to become an investor, you have to fill a physical KYC form, give it to somebody, wait for 3 days, and then
Wow.
start investing. Okay, this was 2016. If you want to invest in mutual funds or stocks or any product, the only way to
Mm.
invest is you add an pay in your bank account. That has
Uh-huh.
a 24-hour waiting period, and then you transfer money and then send a UTR code to the whatever the company, and then they do the mapping, and then you're ready to invest, right?
Yes.
And the other realization we had was, you would appreciate, financial services I have always been sold by throwing jargons to the customer, right? It's about more
Yeah.
confusing the customer than convincing the
Yeah.
customer. So a lot of our index names and fund names and product names are very complicated names. They don't exactly tell what the underlying
Yeah.
product is.
The technical
So we
names basically,
said,
right?
yeah. So we said, I think, okay, let's build a product that solves just these three problems to begin with, right? Lack of
Mhm.
knowledge, lack of access, and lack of trust. That's the we said. Look, that's the in on the positive side we said simple. Our three pillars were simplicity, accessibility, and trust. And we said so. The first initial focus was just to onboard customers seamlessly. How do you do KYC completely? So we were the first app at that point in time, 2016, to launch a product that did digital KYC without Aadhaar by
Oh, wow.
just by taking pictures of your PAN card and address proofs. We had OCR where you would read the documents. You didn't have to enter anything, and you could just take a selfie of yours. You didn't have to take a passport photo and stick it onto your form. So we just completely
Yeah.
digitized
Uh-huh.
this. This was 2016, and that became an industry standard. So much so that eventually SEBI also approved it with a e-sign on top of it. That
Correct.
was one thing that we did where access problem got solved to some extent. Of course, then Aadhaar came and it took to a different level. This was again pre-Aadhaar days.
Correct. Yeah.
We were also in 2016. We said, look, payments is a problem. Payments is a perennial problem. Like
Of
you,
course. It was a
it's
different
there's all
problem back then. It was a whole
yeah
different problem still now.
yeah. So we were one of the first guys, probably were the first guys to work with BillDesk at that point of time and build a payment gateway investment where if you want to invest 5,000 rupees, you can just use a payment gateway to transfer money, and then you could just investment would go through. And imagine in
Right.
2016 this was not available. You had to transfer 5,000 rupees from a registered bank account and wait for approval and then invest. So we
Yeah.
did some of that. So it solved a lot of lack of access. We also people were scared of jargons. So we said, look, no jargons in that. It's just no jargons.
Mhm.
Like not a single jargon. That's the commitment we made to ourselves. So we said, look, dump it down to solutions. You want to invest 5,000 rupees. You want to go on a vacation. You want to plan for retirement. Those kind of use cases that people don't think as these as financial products, but more as solutions. And that was the way we tried to solve the complexity. Trust is where the hardest part was, right? Because rest was all in our
Mm,
control.
mm.
Trust is a two-way street. The customers need to trust and we need to make those promises. There, the challenge was, or is still, is we are in the
Mm.
business of taking money from customers, right?
Right.
Unlike
Yeah.
credit businesses and what we sell, what we offer is not an instant product, but hope of a better
It's
future,
correct.
right?
Correct.
So there, I think the only way to build a trust is us for us to be a really, really strong brand. So then we decided to take a partnership-led approach instead of us trying to, spend lots of marketing dollars and spending money. We said, let's partner with incumbent institutions like banks and financial institutions, and we partnered with them. So today, I'm glad to tell you that we partnered with 15 banks where we are their wealth management partner where they offer Fisdom to their end customers. So it's a branded
Okay.
product, branded
Okay.
partnership, no white labeling. So we are a consumer product, 100% consumer product. We are building for the consumer, but we don't reach customers through Google, Facebook, television advertising, but we reach through partnerships. So we are
Okay.
embedded.
Oh,
We are present on 15 banks, with cumulative customer base of nearly 40 crores. That's the origin. That's where we started with mutual funds, and over a period of time, now we've added stocks, pension funds, tax filing. We've added HNI segment. And more info. So let me sort of pause there. Shiladitya, I said this I could go
yeah.
for next half
I
an hour.
No, this is great. I mean, the fact. Thanks for telling the early stories. I don't think a lot of people, and definitely a lot of listeners, especially if they're new to, let's say, the startup ecosystem post pandemic, I don't think they even would remember a lot of the complications that you would have as a retail investor or as a, it's just daily life of investing back
Yeah,
then, 10 years ago. Because, and this is again maybe testament to the demographic you deal with as well, whether it's through the banks or otherwise. I think there's been a flux of new investors who realize that investing is easy now, no thanks to folks like yourself, and that's why they are even doing it. I don't think a lot of people were even considering it given the complications you mentioned early on in 2016 or prior to that. So uh, getting into a little bit more detail as to the pieces that you solved, and you said that you were probably one of the early few to, let's say, do video the digital KYC process. You were also, there must have been a lot of plumbing you had to sort of put together just to enable this to happen, right? uh,
yeah.
was How much of it was regulatory plumbing that you had to deal with, and how much of it was just simple product? I mean, I'm trying to understand the timeline of what changed What
Yeah.
allowed you to sort of you know take these change
Yeah.
the product user experience of the product?
No, that's a great question. I think there was a regulatory plumbing required, and there was also regulatory education required, right? The problem was the sources of information were multiple, which are all regulated, and they don't talk to each other. Like, for example, CVL, the exchanges, then payment gateways, then there are something called KRAs. There are multiple people
Yeah.
who get come together to provide the service, and guess what? They don't talk to each other. So it was our job to talk to each of them independently, establish APIs. In fact, in many situations, we were one of the first few guys to use BSC Star MF, the platform. Our tech
Hmm.
team helped them devise APIs so that they can go and give it to everybody else. So we had to work with
Wow. Okay.
Bill Desk to figure out, hey, listen, how do you transfer money? What kind of data do you get? Because when customers invest, unlike a typical payment gateway, the merchant gets the money. In this situation, the merchant doesn't get the money. Money goes to the exchange. And so, like,
Yes.
I'm the merchant, but money goes to somebody else. And this infra just did not exist with some of these vendors, right? So we had to get a lot of specific infrastructure built by exchanges, KRAs, and DP participants, and many of these guys, and then consolidate. So basically, we had to simplify for the customer, simplify
Hmm.
for the ecosystem, and take all the complexity on us. So as a result, some of our tech stack became like really, really complex. And our ability to deliver customer experience was a function of how well the external plumbing is working. Of course, thankfully, over the last 6 years, a lot of the plumbing has become simplified. For example, we spoke about KYC.
Right.
Now it's all Aadhaar.
Right.
Aadhaar has simplified the KYC so much. Payments are still a problem because of the problem that I, as a merchant, use the payment gateway, but money goes elsewhere, and
Right.
thus
Okay.
reconciliation, three-way reconciliation can be problematic. But this was regulatory education that was required. So we had to go and sell this to all these people. Say,
Correct.
no, look, this is a new way to do it. Some
Correct.
people were very, very positive, like, the exchanges were, yeah, look, this is great. AMCs were very supportive, because it's for
Because
them,
you were
it was a
selling
new
their
channel,
products. Yeah.
also new channel,
More
right, for them,
distribution. Yeah.
right? So I think those were some of the early challenges of delivering high quality user experience while integrating with external interfaces, which in turn don't talk to each other. For example, today you go to any place, any financial app, right? You put your PAN number,
Mhm.
it'll immediately fetch a lot of information and give you something, right? Today, that's an
Correct.
established infra. This did not exist, see, 2017
Okay.
also, right? We had to fight hard with to a lot of things just to take the PAN number and say, hey, listen, what's your, let's say, KYC status? Like, that's it. That itself was like a Herculean task at one. So
Got
obviously,
it.
I'm so
Got it.
grateful we've had regulatory tailwinds behind us, where each of these aspects have got thankfully simplified. And the other thing that we did not talk about was the other structural tailwinds, right? If you remember,
Mhm.
Shiladitya, 10 years ago, you could get a bank deposit at 10%. If you're getting a fixed
Yeah.
deposit at 10-12%, you didn't need to invest in
It's
other places, right?
yeah, you didn't actually you didn't feel the need to invest anywhere else. Correct.
Right?
But
So
that's also changing consumer behavior towards investment. I think a lot of, like I said, the new influx of investors today,
yeah,
uh, it's not that 10% isn't enough for them, but it's just I think the I think I want to say the inertia of an FD is not not fun for them. I think that's why they are looking at alternative investments. But yeah, that
that's good.
I'd love to hear your take on that as to also if you see if you have
No, no,
any idea.
absolutely. So there are two parts to that. Excuse me. One is the inertia, and it's just a boring product. Like,
Yeah.
it just gives you X%. The second one was, people had indexed in their mind, hey, listen, like, I'm going to earn 10%. And as you know, the last 8 years, it fell to 5%. There were some banks which are giving 4.5%. It
Yeah.
just, for a lot of customers in their 30s and 40s and even in 50s, it became very hard to digest. So, and that was a
Hmm.
time also India had a bull market. Sensex was delivering like multiple of that. So a lot of people in 30s and 40s moved into capital markets in any form, pension fund, mutual fund, stocks, irrelevant, or even PMSAIF, through just because of very low interest rate. Look, this is just not worth it. Is the better than this? I move some money to some capital market
Yeah, yeah. I
instrument.
mean, it's Not even inflation covering. Yeah. So what's the point?
Although they don't understand the concept of inflation, most of the country, as you would know, right? For them,
Yeah.
it was like their own benchmark. Look, I used to get 10%. Now I'm getting 5%. These people say Sensex delivers, let's say, sake of argument, 10%.
Yeah.
I might as well move some money there. So there is
Correct.
falling interest rates, gold being volatile between 2011 to 2019, and demonetization and the RERA Act. Right, I think these three have been
Yeah.
a huge drivers of changing consumer behavior. And my view is this is a 20-year story, Shiladitya. Like we are what I call as financialization of savings. This is like I think we've crossed like 3 years. COVID accelerated. I think we have like another 15 years to go before
Wow.
we've financialized India's wealth.
That's it's an amazing viewpoint, and I love I'm loving the fact that you're taking this sort of long-term stance, even in spite of saying, telling us about so many things that have happened since the time you started. Right? I don't think you would have imagined the world to be here, even at 2022, where we are. Right? In your early stage of the journey, you probably imagined it to be much further away from where we are today when you started.
Oh yeah, absolutely. I mean, we didn't think we would have these many explosion in terms of market segments and sub-segments and changing consumer behavior. As I said, Aadhaar, demonetization, and then subsequently
No.
COVID. I think those three have been irreversible changes that have come to the market landscape.
Superb. Superb. So I'm gonna first take a quick break, but then Subbu, we're gonna come back and talk a little bit now about not just what the product is today in its current shape and form, but where it's going. So quick break, and we'll come right back.
Hi, hello everyone. It's been another great week on the IVM Podcast Network. On Cock and Bull, Cyrus, Akash, and Noel discuss a Kerala movie theatre creating soundproof crying room for parents with babies. On the Filter Coffee Podcast, Karthik talks to Ajay Pratap Singh, CEO of Sports Kida. They talk about sports writing and the emotional connect sports have in India. On Paisa Vaisa, Anupam talks to Shruti Jain, Chief Strategic Officer and Sustainable Influencer at Arihant Capital. They talk about socially responsible investing, or SRI, and the history of smart and sustainable investing. On the Advertiser's Guide to the Galaxy, Karthik Srinivasan explores the unethical LinkedIn tactic in Monster's rebranding announcement. And on Explain Like I'm 10, Meghnad welcomes Ashish Singhal, founder and CEO of CoinSwitch, and Urjita Vani, stand-up comedian and writer, to discuss whether cryptocurrencies are here to stay. Once again, don't forget to visit our merch store on ivmpodcasts.com. We have some exciting stuff for you. Follow us on social media. We are IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. If you like our shows, spread the word. Tell your friends and don't forget to rate and review them wherever you're listening to them. You'll also find all our shows on youtube.com/IVM Podcasts. And finally, we would like to thank our sponsors this week, Kotak Privy League Program and HDFC Mutual Fund. Thank you for making this possible.
Hey, welcome back, everyone. Subramanya, I think Subbu is what all your friends call you, and I think we chatted about this earlier. You told us the origin story. You told us, obviously, how you saw the world when Fisdom started and where it is today, drastically changed from probably what your original viewpoint on the market was. Especially as an ex-VC, I'm sure you did like a TAM analysis on what we could do, and now that TAM has progressively changed over the years. I'd like to understand where you are today in terms of, let's say, how you go about improving the product. What are your sort of North Star goals for the people you do serve today through the banking partnerships that you have? How or even, let's say, direct consumers you work with, right? What is it that you now use to differentiate yourselves? So today we are in an era where all the tenets you sort of maybe set up are being used by everyone and everyone else. There's so many other apps out there. Everyone's trying to do simple, fast, quick, trustable or not is questionable, but investing in some ways or the other. So how do you stand? How do you differentiate, let's say, your
Yeah.
product and your vision out in this?
Yeah, no, that's a great question. So before that, maybe I'll spend a minute on the market, right? While we market has exploded, my view is we're still very, very early in our cycle of adding more and more customers. You know, we, uh, we have approximately 3 crore active investors across stock markets and mutual funds and pension funds. And that's still a, fraction of where it is likely to be in
Yeah.
5 years. So my personal view is this like number is likely to be something like 10 crores in 5 years, right? Like, so we have a massive headroom for growth where most players don't necessarily have to eat into each other unless there's an economic slowdown in cycles, because we are a, we need economic growth to be consistent and long
Of
term
course.
for our kind
Of
of
course.
businesses, right? So market is like massive headroom for growth. Coming to the way our product functions, Shiladitya, is one of the things that we said our product will be, it's a guided choice platform. What it means is that unlike some of the many other players in the market, which is do-it-yourself platforms, where customers can come and just do whatever they want. Like Zerodha is an amazing product. So you go, you know what you have to do, you execute the trade. So Zerodha's promise to customers say, look, I will offer you the fastest way to execute a trade in the cheapest. So that's Zerodha's promise, right? And it works for a certain segment of customers, and they've done a phenomenally great job. Our customer base is the product we have is there's obviously a distribution part where we offer customers, but we also have a layer on top of which is advisory layer, where we guide the customers towards products and instruments based on where their life cycle is, because investing also requires a little bit of awareness and a little bit of
Right.
education, and most people don't have that awareness. The most common question people have is, look, I have 5,000 rupees, I don't know where to invest.
Yeah.
Just tell me where to invest, right? So we do risk profiling, and then we recommend customers certain sets of products based on the risk profiler, but it's not mandatory. The customers can overrule. So we do distribution like many of the other platforms which offer the fastest way to invest in stocks, mutual funds, etc. But we also offer a layer on top of it, which makes their journey simpler, where they know, okay, look, this is easy. I have 5,000 rupees. Okay, now I have an easy way. And the trust comes from one, the customer's own experience on the app. And the second one is because we are also working with the bank and the customer has been referred by the bank. So there's also a trusted layer of trust that the bank is adding to us, right? From where the customer is coming from. Like things like, let's say, on our platform, if you've built up a portfolio of 10 lakhs, right? You want to
Right.
sell 1 lakh rupees for some use, right? You don't need to decide which funds or stocks to sell. You can just put 1 lakh rupees. The app will do its kind of calculation based on various parameters, performance, tax implications, etc. It'll tell you, okay, if you want this much money, sell these items, these products, and you can just enter OTP, entered and done, right? So we're not just solving the product, access, which is, as you said, is completely got solved. We moved up and saying, hey, listen, look, let's also offer specific tools to customers that helps them in decision making, what to buy, what to sell,
Right.
and when to sell. That's still with the third party product. The
And
move future.
how dense is this into how, or rather how proprietary is this sort of an advisory, right? Because even this advisory domain has been the domain of individuals, has been the domain
That's true.
of teams. It's been a very black box as to uh, why what's the right advice, what's the wrong advice. So how are you adding further I mean, if a machine is doing this, how do I trust a machine?
Yeah, so
With
the machine delivers the advice, but there is a research team that actually does the calculation, etc. And in fact, we publish the research methodology on the website as well as the app. On the page where the funds or etc. are recommended, you can see why and how, etc. Right? So
Okay.
there is enough rationalization we try to provide. You're absolutely right. Advice has been has been the realm of individual financial advisors, etc. Our view has been that for a certain threshold, you can just programatize advice. If you want to invest, let's say 2 lakh rupees, 1 lakh rupees, 50,000 rupees, frankly, you don't need advisors. That
Of
advice is
course,
fairly
yeah.
straightforward enough that it can be, fed into an engine, and that engine kind of does its job, right? But advice is also a DNA. Advice is also an orientation. Not every company has the same orientation. Similarly, working with bank partners to reach end customers is also a orientation, because most of the consumer companies have a consumer DNA to marketing as well. We don't do
Yes.
marketing, as I said. So we reach customers through partnership. So our energy is on building consumer products so that it reaches through various
Nice. Nice.
partnerships. I think from the given that a large segment of these 3 crore active customers, active investors we have in the market are still figuring out this, right? The education, our awareness is still not a solved problem. Mutual fund sahi and AMFI have done a bunch of job, but still there's a question mark. Hey, so is this good for me? Am I in the right type of vehicle? There's a lot fear of unknown, right? So I think there is a large segment of customers who want, this specific piece of suggestion. The harder problem is trust. Product creation is
Mm,
kind of
mm.
doable. Enough smart engineers and product managers will create that product. Trust is the one that takes there are three ways to build trust: time, money, and you know living off using somebody else's trust. Those are three ways to build trust, right?
I,
It
I was
takes
in a
time.
conversation. I was in a conversation since you mentioned ways of building trust. I just thought I'll push this in there. Uh, where the best definition I've so far heard of what will build trust is doing what you will say you will do.
Yeah,
Is also another way of
absolutely.
building trust, right?
Absolutely.
So
So
if
we
you
have to
say
make a
something,
promise.
do it. Yeah.
Yeah. We have to have that promise and we have to deliver that promise. But even then, I need to spend money to tell the customer what my promise is, right? Which
Of
is the
course.
branding, right? There's just brand spends,
Yes.
etc. Or I just keep doing it again and again and again over a long period of time. The people believe the trust, believe me, which is like
Yeah.
Zerodha, right? Zerodha
Yeah.
hasn't marketed, but Zerodha has been just saying the same thing and delivering the same thing over and over for like last 12 years. Just right.
Correct.
So it either takes time or it takes money, which is spend ads and tell what you
Sure.
do, and then people come and experience it. We took the time and the partnership approach where look, there are institutions that are already trusted by customers. Why don't we take help of their trust and get those early customers in and build a certain customer base, and over a period of time we'll do other things as well. So for us, time and partnerships have been the way we're building trust. We've not done, we don't do marketing, branding, large scale television or Google or Facebook, etc., because those are expensive ones. As I said, I used to be a VC, and
Yeah.
one other takeout away from a being a venture capital investor was actually to be as frugal as possible, as opposed to, and can we build a company with as limited as capital as possible rather than raise as much
Of
capital as
course.
possible, right?
Of course.
So that's the way we're building trust. I think we've been around now for 5.5 years. We now have about 1 million customers across our products. So kind of active customers, not users. So fairly chunky size. Our bank partnerships are yielding results significantly. We launched our stockbroking business, direct stock investing product last year.
Yeah.
And
Yeah.
as you see, it runs head on with lots of incumbent
Yeah.
players. The good news there, Shilatya, is, as I said, market is just very large. I think there's scope room
Yeah,
for
there's
lots of
more
people.
than enough room. Yeah, there's more than
Right.
enough room. I think now is where that differentiating, or at least
Yeah.
your position in the market, will stand out to certain types of investors, I guess.
Correct. We still need to make product innovations. I think the good thing about us going from 1 crore to 3 crore in the last 2 3 years is there is depth in the market, and there is you several sub segments have come which you can create specific products for. Some good
Right.
people are going only after millennials. Some people are going after only option traders. Some people are going after only MTF traders. Some people are
Yes.
going only after specific. So there is depth in the market that Fisdom as a platform can just go after one specific sliver of customers and build products for them. Like for
And
example,
it's valuable to do that.
right, like through our bank partnerships, we get access to customers in tier two, tier three towns who are in the 35 to 45 year age group. Like
Hmm.
I can go deep and build products for them, which simplifies their investing experience. Right.
Very true.
I think that's the advantage of the last 3 4 years, where now market is as a critical mass. Is it mature? No, I don't think so. I think we still have a lot of headroom to go here. But there's a
Hmm.
critical mass that I don't have to run head on with, let's say, someone like Zerodha, who's a very, very established brand. So I can kind of stay away from competition, go after a different segment through a different channel, different product proposition. So those are the approaches we are taking.
I was going to be leading into my sort of question as to how, where this goes next, right? I think everyone, you yourself as a VC, definitely have multiple, let's say, 18-month forward looking plans already in
Yeah,
place.
yeah.
What specifics can you tell us about what's coming up next for you guys?
Yeah. So yeah, so obviously there's a lot to do here, Shiladitya. There's like
Yeah.
there's just a ton of opportunities in this broader investments business. So right now we distribute products, we provide advisory on top of those the third party products. But as we work through our channel and we build customer scale, we realize there is a lot of gaps in products as well. There are no products
Hmm.
that exist for certain segment of customers. For example, I come from a tier 3 town, tier 4 town rather. So if I think of a tier 2, tier 3 town in India, let's say a Mysore or a Salem or a Surat,
Hmm.
Surat maybe it's Gujarat, maybe we should keep it out.
Yeah. Yeah.
uh, the needs of a customer in that segment, particularly affluent segment customer, is very different from that of a let's say a 45-year-old rich person in Mysore is very different from a 45-year-old rich person in Bangalore.
Of course.
The
Oh
product,
yes.
right,
I
the
get what you're
product
saying.
requirements are different. Like a 45-year-old rich affluent person in Bangalore is likely to be higher risk taking than a 45-year-old rich person in a Mysore. And two, there is nobody who's serving that customer. So we're thinking our
Hmm.
next move would be to start creating products, our own manufactured products where we can deliver specific value to those customers. Like some of these customers want, look, I don't want high beta concentrated stocks. I need,
Hmm.
consistent 10%, 8, 9% return, 9% return, right? They're different. So the advantage of market growth in the last 6 years is we can build specific products for these customers, which is where there is no,
Yeah.
exit. So I think
The risk is mitigated to an extent, but yes, you know the buckets in which you want to put their
correct.
money
Right.
in some ways.
So that's some of those things. So I think I think our distribution and distribution and advisory play is kind of coming along very well. We have a long headroom. We work with 15 banks of all kinds. We work with the third largest bank in India, Union Bank of India. We work with a bunch of private sector banks. So the cumulative customer base that we have access to through these banks is 40 crores.
Yeah.
Obviously, we have a long way to kind of penetrate this bank and get to a certain critical mass. We just have about 1 million of those customers working through us or investing through us or buying our products and services. So we just have a long way to exhaust this channel or the customers that we have
Sure.
acquired. We're going to
Sure.
acquire through this. But in addition, that's the more of, look, I've got a channel, I've got these products, and I'll just kind of go deep. The other one is creating newer products. And last year we also started, because of the channel, we were largely catering to retail segment, people who are investing 1,000 rupees, 5,000 rupees, 10,000 rupees. A year ago we also started mass affluent segment, which is one segment about people who are willing to invest 25 lakhs to 1 crore, because the bank channel has access to these customers. So we have access to customers. We did not have a product
Yeah.
or a proposition. We
Yeah.
built that product proposition, and now we have a dedicated team that is looking at this segment. So lots of opportunities
Sure. Sure.
within
I
this
had a
realm.
I had a tangential question to this because since you mentioned you work with bank channels, and of course I'm assuming this is this 100% dependence on distribution through these partners, through these partner banks,
uh,
or are
no,
you
so right,
also doing your
yeah.
direct to customer?
So we don't spend money directly to customers to acquire. We have marginal spend, but otherwise, because of the fact that we've been around for 5 6 years, and there are in the early days before we had signed up the banks, we did do some branding, marketing, performance marketing.
Right.
So today, I'd say 90% of the 80 to 90% of the incremental customers are coming from the bank channel. But as a
Okay.
overall base, I would say 60-65% is through from the bank partners. Remaining 30-35%
Got
is direct organic,
got it.
largely organic.
Because
So our apps are rated 4.5, 4.6 on App Store. So it comes up when people are
nice.
searching for some
Yeah.
of the products.
And I mean, my question was more along the let's say the pros and cons of this, right? I mean, your dependence on traditional banking channels and the audience they serve versus the ability to reach a new kind of customer who's coming to a platform like yours directly. I'm sure there is some little bit of difference of expectations as you might
Yeah.
see from the customer profile, and also since banks are not just going to remain distribution channels for you. I mean, they have their own innovations, they have their own 5-year digital transformation roadmap items, I'm sure, on how they want to sell their own services. So How are you managing that
Yeah.
relationship is something I was a little curious about.
Yeah, the first one is a great question. I think there are pros and cons of going direct versus working through partners. Working through partners obviously makes us more efficient because once you decide, look, this is a long term game for you as a founder, right? It makes it easy. You're not
Yeah,
under pressure to
back
compete
money.
with
Yeah.
somebody else. You're in your own zone. So the pro of going direct to customer is if you have capital, you can manufacture scale by doing branding and all of that, right? So here you're dependent on somebody else's growth, right? So that is a bit of a that's a pro and a con of both. But in our case, the good thing is the banks themselves are going through a digital transformation strategy. So to give you a
Correct.
sense, like out of the 40 crore customers our partner banks have, right now there are about 5 crore customers who have a mobile app, banks app on their phones. This number used to be 2 crores 2 years ago,
Yeah.
right? So for me,
Yeah.
what what is critical is this 5 crore becoming 10 crores and 10 crores becoming 20 crores, because that's my top of the funnel. So there the good
Correct.
news is there is a serious amount of thrust thanks to UPI penetration outside of the bank app, like phone pay and Google Pay. Banks are now finding, hey, so look, how do we become relevant? How do we make our apps more relevant? And the
Yeah.
way to
Yeah.
make app relevant is by adding more touch points, that is adding investments which are engaging products. So today we get inbound queries from various banks. Hey, listen, look, by the way, this whole bank-led wealth management strategy was not there in India. It does not
Hmm.
exist. So there's no US China equivalent for our business. This is uniquely Indian. That's because of the unique place that banks have in India's financial landscape, where
Right.
one, there's a high degree of security, in the sense security in the sense people typically don't lose money even if a bank goes down. RBI
Yeah.
somehow
Yeah.
finds a home and customers' deposits are protected. And second one is distribution, tier 2, tier 3, tier 4, like because of the public sector bank, they are everywhere, right? So because of the
Yeah.
uniqueness of the banks, this whole partner-led, wealth management is also fairly unique. It doesn't exist anywhere. And we started this, and today we're kind of we're seen as, among the bank circles, we are seen as, hey, listen, look, these guys, if you want to work partner with somebody, these are the guys.
Hmm.
The second part was interesting where you said, hey, listen, look, why wouldn't they do it on their own and why would they rely on you? And if they,
Hmm.
I think that's a great point. I think today, if you're not working with a bank, it is because they want to do it on their own, right? But once they start working with us, the advantage for them is uh, the whole wealth business becomes a profit center for them. Otherwise, they have to invest
True.
in product,
True.
technology, build it, and then start acquiring
Very
customers.
true.
So we're saying, look, you don't want anything, just give it to us. We will. So the good news is we are becoming strategic digital partner for some of these banks. And again, we don't go after the HDFC Axis banks of the world. We work with Karnataka Bank, City Union Bank, Tamil Nadu Mercantile Bank, Bank of India, Indian Bank, Union Bank of India.
These are
These
by
kind
no
of
means
banks.
small banks either. I mean, let's be honest.
Oh, these
That's
are
the
large
beauty
banks.
of,
These
yeah.
are large
Uh,
banks, but not as sophisticated as HDFC Bank from a technology perspective or
sure.
from a business sophistication perspective.
Correct. Correct. No, very true. And thanks for sharing that with us. I think that's also a good eye opener to the realities of working in this domain, right? I mean, your from the early story you told us about building the plumbing and education, and just sort of you're working your way through the various, navigating your way between people who don't talk to each other, to now where they have, some of them have their own convictions and efforts, to others who are obviously your, let's say, riding on the back of people who know how to do their job, who are experts at this, let's say in your case, product and technology experts
Right.
like yourself. So I think both exist is great. It's only better for the consumer. And like you mentioned, there's a long way to go just in terms of headroom of number of people using or investing in the first place. So as closing notes, Subbu, uh, I know a lot of people listening to this podcast, just like yourself, people who are already in the startup ecosystem, people who are probably thinking of getting into it. Definitely fintech overall, and in, let's say, wealth tech, or whichever buzzword you choose to identify yourself with, is still of interest to a lot of people. So what would your sort of advice be? And on the same, on your own, on from a Fisdom standpoint also, like, Are you guys, let's say, hiring, looking forward to having people join your vision? Anything else you'd like to share as we wrap this up?
Yeah, no, absolutely. We are recruiting, we are hiring. We're probably one of those few companies where we are actively hiring for a variety of roles, engineers, product managers, so on and so forth. So please, would love to have you guys on board our journey. On the first one, I mean, that I think that's more of a sort of a suggestion advice for founders. Shilata, if I get that right, like
Yeah,
the question.
sure. Yeah, yeah. Founders
Yeah,
or
that's
would be
a
founders or who want to get into this into this fun slash
yeah.
chaotic place.
Yeah, so look, I think the best time to start up was 10 years ago. The next best time is today. So if you're passionate about something, just do it. Whether you make money or not, you will come out really smarter about yourself. Like for me, entrepreneurship has been a self-learning, self-awareness journey more than anything else. To me, the biggest takeout is just the journey, and journey is the destination. I would say. I would also
Right.
say keep a long-term view. It's unlikely you build a business in 2 3 years. It takes time to build trustworthy, enduring businesses. So have patience, and fundraisers and everything keeps coming and going. But what remains with you is customers, right? I mean, a company exists for customers, shareholders, employees,
Right.
and so on and so forth. Sometimes what happens is in hyperfunding and some, let's call it hyperfunding environment and funding winters, we kind of try to ignore the customers and we focus more on shareholders and investors and employees. So like
True.
it's easy
True.
to lose sight of customers. Let's put it right. And there have been phases where we've been guilty of some of that, right? So every company goes through that cycle. So yeah, keep customers at the always at the core of your mental space.
Nice, nice. That's definitely good advice, and it's good to hear you sort of acknowledge that, especially given the time you've spent both on the investing side of your career as well as the entrepreneurial side. So thank you so much. Where can folks reach you? People who've been listening to this podcast, what's the best way to sort of give us feedback? Do you want to share your Twitter handle or your LinkedIn or something like that where people can reach you?
Yeah, my email is subbu@fisdom.com. My Twitter is Subramanya _SV. That's SUBRAMANYA_SV. LinkedIn, I think it's Subramanya SV. I forget the LinkedIn handle. Sorry about that.
No
But I
problem.
think
We'll
that's
put it
easy
in
to
there
find.
in the
Yeah, I'll
podcast
send it.
notes
Yeah.
as well.
So would love to hear from folks, feedback, thoughts. Would love to figure out ways to collaborate. I think the other point I would say is, financial services is all about collaboration. Like as
Yeah.
Fisdom, we probably work with like 20, 30, maybe even more software business partners of all types. As I said, look, you and I
Interesting.
used to work with CleverTap. That's just one of
Yeah.
several things that we have
Yeah.
worked with, right? So it's all about collaboration. So would love to figure out ways to work with folks who are listening to it.
Superb. Thank you. Thank you so
Thank you
much.
so
And for
much.
everyone listening in, yes, wherever you're listening to this podcast, it's also my uh, customary reminder to tell you that please leave us a rating and a review. Uh, Folks like Subbu, of course, continue to make us do what we do here every day, every other week, talking to folks like yourself and, sharing this information out into the world. So please give us a rating, give us feedback, and yes, wherever you're listening to this podcast, leave us a note. So thank you so much, and we'll be back with another episode again. Thank you, Subbu. Thank you so much. This was awesome.
Thank you, Shiladitya. Thanks for having me. Thank you.